Let's be real. Bitcoin has been all over the place lately. And if you're watching those charts, you might be feeling just a little bit nervous. But the real story here isn't just about a few down days. So let's get right into it. Are we just looking at some short-term pain, or is there something much, much bigger happening just under the surface?
Ouch. Yeah, let's just start with this number. Bitcoin is closing out the fourth quarter down 19.15%. That's not just a small dip, folks. That makes it one of the weakest quarters in years, and it absolutely explains all the anxiety we're seeing in the market right now. So, what's behind this nosedive? Well, according to the on-chain data from CryptoQuant, it's kind of like a perfect storm. You've got your short-term holders, and they're being forced to sell, often at a loss. Market sentiment? It has plunged straight into extreme fear. And to top it all off, we're seeing a steady stream of money flowing out of Bitcoin ETFs, which just adds more and more downward pressure. It's pretty much a classic cooldown after a really long, hot run.
Okay, but what if that daily price chart isn't telling us the whole story? What if it's actually a little misleading? When you start to peel back the layers and look at the more fundamental signals, you might just find that the seeds of a major recovery are already being planted, hiding just beneath all this short-term noise. And hey, don't just take my word for it. Check out this take from the asset management firm Bitwise. Even with all the chaos right now, they're arguing that Bitcoin is on the verge of something huge, breaking its old 4-year cycle to hit completely new highs. Sounds pretty optimistic, right? So, how on earth could that be possible? Well, Bitwise points to 3 powerful, game-changing pillars that are reshaping the whole market. First, you've got the supply shock from the halving events, where the creation of new Bitcoin gets cut in half. Second, there's this massive wave of big money, of large institutional players finally jumping in. And third, despite the recent outflows, there's a relentless growing demand for those Bitcoin ETFs. These aren't just temporary trends. These are deep, structural shifts. And that brings us to point number 2. All these shifts are leading to a really fascinating outcome. We're seeing clear signals that Bitcoin is evolving. It's starting to shake off its reputation as just some wild speculative asset and is really showing signs of maturity. In fact, and I know this might be hard to believe given its history, but so far in 2025, Bitcoin has actually been, well, surprisingly stable. You might even say more stable than some of the biggest names you'd find in the stock market. Just let this sink in for a moment. This year, Bitcoin's volatility has actually been lower than that of a tech giant like Nvidia. I mean, wow, the asset everyone calls too volatile is behaving more calmly than a blue chip stock. If that doesn't scream that a change is happening, I don't know what does. Okay, part 3. We're calling this a seat at the table. Because with this newfound maturity, Bitcoin is no longer the outsider looking in. It has officially earned its spot with the largest, most important assets in the entire world. It's playing in the big leagues now. I mean, just look at this. Bitcoin is sitting firmly among the top 10 most valuable assets on the planet. It's sharing the stage with gold, with iconic companies like Apple and Microsoft. This alone just shows how incredibly far it's come from those early days when, let's be honest, a lot of people were calling it a joke. And here's the crucial point. Its position on this list isn't just a flash in the pan. It's not some fleeting moment from market hype. It represents a permanent, fundamental shift in its status in the global financial system. More and more major institutions now see it as a core part of their portfolios. And that leads to our final point, the new conversation. Because of this massive shift, the entire conversation around Bitcoin has changed. We are no longer debating whether it's going to survive. You know what? That question has been answered. The new conversation is about its role in reshaping the entire future of finance. This story is evolving every single day. So if you want to keep up with every twist and turn in the crypto world, do us a huge favor and be sure to like, share, and subscribe to our channel, Crypto Explorer 24/7. It really helps us keep bringing you this content. So as we wrap this up, yeah, the current market might feel like a major setback. It's easy to get spooked, but when you zoom out, when you look at the institutional adoption, the growing maturity, and its new status as a top global asset, it leads you to one final powerful thought. The question is no longer if Bitcoin will survive, but just how high it will ultimately climb. All right, let's jump right in. We are talking about a massive, high-stakes countdown for Bitcoin. You see, as 2025 is wrapping up, the world's biggest cryptocurrency is in this frantic race against the clock. And what happens next? Well, it could shatter a huge historical pattern that has pretty much defined its best years. Take a look at this number, 6.24%.
It might not seem like a lot, but right now, this single figure is, well, it's everything for Bitcoin. It's the one number that has the entire market just holding its breath as we barrel towards the end of the year. And that's the million-dollar question, isn't it? To keep from closing out the year with a loss, Bitcoin has to rally more than 6%. If it can't pull it off, it's going to mark a really significant and, let's be honest, an unwelcome first for the asset. Now, here's why this is such a big deal. It's all about the history. Post-halving years, the year after Bitcoin's new supply gets cut in half, they are historically the glory years. We're talking periods of just explosive growth. So for 2025 to break that winning streak, that would be a major psychological hit and could signal a huge shift in how this market works. Okay, so let's back up a little bit. How in the world did we even get here? To put it mildly, the second half of 2025 has been a wild ride of incredible highs and some truly gut-wrenching lows that brought us right to this nail-biting finish. I mean, just look at this timeline. You can really feel the whiplash, can't you? The market went from celebrating this incredible all-time high of over $125,000 in October to a full-blown painful correction just a few weeks later. And that's what set the stage for this dramatic fight to end the year on a high note. And the severity of that drop was just staggering. We're talking a fall of nearly 30%, from that peak all the way down to around $80,000 in November. That's the move that wiped out the year's gains and kicked off this huge debate among analysts. Is the bull market actually over? And adding to all that concern is a really key technical signal. Think of the 365-day moving average as a kind of long-term health check for Bitcoin. Since November, the price has been stuck below that line, breaking a positive trend that had been going strong since 2023. It's a sign of potential weakness ahead, and it has a lot of people worried. So here's the crucial point. This isn't just a crypto story, not by a long shot. To really understand what's happening with Bitcoin, you have to zoom out and look at the bigger picture. And right now, that means all eyes are on the US Federal Reserve. So for anyone who isn't deep in the weeds on this stuff, the Fed is basically the central bank of the United States. When it decides to do things with interest rates, those decisions create ripples across the entire global economy, and they affect everything from stocks to, you guessed it, crypto. And here's the simple way to think about it. When the Fed lowers interest rates, it's kind of like pumping cheap fuel into the economy. It makes it easier to borrow money and encourages people to invest. A lot of that new money often finds its way into what we call riskier assets, like crypto, and that can really fuel some massive price rallies. And in 2025, the Fed did exactly that. They cut rates not once, not twice, but 3 separate times. These moves definitely helped inject a lot of cash into the markets. But the big question on everyone's mind now is that support going to continue? And this is where all the uncertainties starts to creep in. See, despite those rate cuts, the Fed Chair Jerome Powell started sounding way more cautious recently. His comments are making investors nervous because it sounds like the era of easy money might be hitting the pause button. So, with the Fed's next move totally up in the air, what does the road ahead even look like for 2026? Well, the short answer is nobody really agrees. Seriously, the experts are completely split down the middle. You've got some who see a big recovery coming, while others think this decline could easily stretch well into the new year. And it's this complete lack of agreement that has everyone glued to the big economic signals for any kind of clue. And if you look at the data from the CME FedWatch tool, it's pretty clear the market has already made up its mind. Over 81% of investors do not see another rate cut coming in January. This widespread belief that the Fed is going to stand firm is just adding to all the anxiety in the market, and it's weighing on assets like Bitcoin. So it all comes down to this. Bitcoin is at a crossroads. For years, its big cycles have been super influenced by these huge macroeconomic forces. But now, with the Fed's path so unclear, the biggest question for 2026 might just be whether crypto can finally break away and forge a path of its very own. I guess we'll just have to wait and see. Today, we're digging into a pretty bold prediction about the future of crypto and real-world assets. We're talking about a potential multi-trillion-dollar shift that might not be coming from where you expect. So where's the next trillion-dollar market in crypto going to come from, right? Your first thought is probably Wall Street, maybe Silicon Valley. But while all eyes are on those places, one top crypto exec is pointing to a completely different part of the globe.
Meet Jesse Knutson. He's the COO over at the crypto exchange Bitfinex, and he's saying the real action, the main engine for growth in tokenizing real-world assets, isn't in the usual places. He thinks that by 2026, it's going to be the world's emerging economies leading the charge.
All right, so Knudsen is betting big on something called RWA tokenization. But what is that exactly? Let's quickly break it down.
At its core, it's a pretty simple idea. You take a real thing, anything from a skyscraper to a traditional corporate bond, and you create a digital proof of its ownership rights that lives on a blockchain. It's a digital twin for a real-world asset. But here's where it gets really cool. Think about it. How do you sell, say, 1% of an office building? It's a nightmare, right? Well, with tokenization, you could. It's like turning that building into digital stock certificates that you can trade on your phone piece by piece 24/7. So that brings us back to the main point. Why are emerging markets the perfect place for this to explode? What's their secret advantage over the more developed economies? Well, it all comes down to one word: leapfrogging. See, a lot of developing nations don't have these ancient, clunky banking systems that have been around for 100 years. They can just jump straight to the newest stuff, like mobile payments and other digital platforms. They're not held back by the old way of doing things. And this is a really important distinction. In places like the US, tokenization is often used for stuff that's already easy to trade, like government bonds. It's an efficiency upgrade. But in emerging markets, it's a total game changer. They're tokenizing things like real estate and commodities, stuff that's super hard to get capital for. It's unlocking value that was basically trapped. Just imagine you're a small business owner in one of these countries. Getting a loan or finding investors can be almost impossible. With tokenization, you can go straight to a global pool of investors online. No more slow, expensive middlemen. And for regular people, it means you can finally invest in things that were only for the super rich before, even if it's just a tiny piece. Okay, so the vision is huge. We're talking trillions of dollars. But it's not going to be easy. Let's look at the reality check. And when we say trillions, we mean trillions. That's the potential size of this market in the next 10 years, according to analysts. It's a pretty staggering number, as more of the real world gets represented on-chain. You can see that optimism right here in the forecasts from Bitfinex Securities. I mean, that curve goes straight up. But, and this is a big but, this all depends on one thing. The industry has to move from just testing this stuff out to actually building real products that work for real people. But let's not get ahead of ourselves. The road to that trillion-dollar future is full of roadblocks. I mean, huge ones. You've got massive legal questions like, is this token even a legally valid contract? You've got to have enough buyers and sellers to make a market. And then there's the tech side. Getting all these different blockchains to actually talk to each other? That's a whole other can of worms. So, okay, we've seen the hype and we've seen the hurdles. But what's the end game here? Why should you, as a crypto user or investor, actually care about any of this? This is the big aha moment. The real revolution happens when you can take these real-world asset tokens and plug them right into the DeFi ecosystem. So that digital piece of real estate, suddenly you can use it as collateral to get a loan on a DeFi platform, or you could put it into a pool and earn interest on it, all without a bank. This is what could finally connect the physical world's value to the digital financial world. So there you have it. A deep dive into a trend that could absolutely reshape finance. If you found this explainer valuable and you want to see more breakdowns like this, do us a huge favor. Go ahead and hit that like button, share it with a friend, and make sure you're subscribed to our YouTube channel, Crypto Explorer 24/7. So that leaves us with the big question, right? Is tokenizing the world really going to democratize finance for everyone? Or are all those technical and legal hurdles just too high to climb? We're talking about a potential revolution, or maybe just a really interesting experiment. Let us know what you think. Thanks for joining us.
You've heard it a million times, right? Bitcoin is digital gold. It's supposed to be this safe haven, the thing you run to when things get shaky, just like, actual gold. But what if that story is starting to fall apart? Because right now, while precious metals are hitting the stratosphere, Bitcoin's been in a slump. So what's really going on here? Let's get into it.
So we're kicking things off with what you could call digital gold's dilemma. Because honestly, the market is throwing a serious curveball at one of the oldest stories in crypto.
I mean, just look at this split. It's wild. On one side, you've got gold and silver, the old guard, just crushing it, hitting crazy record highs. And then on the other side, there's Bitcoin, our digital gold, which is down almost 30% from its peak. They're not just drifting apart, they're sprinting in completely opposite directions.
So yeah, it really makes you wonder, right? What on earth happened to that neat and tidy digital gold story we've been hearing for years? Did we get it all wrong? Has the whole idea just broken down? Let's see what the data says.
Because this isn't just a hunch or a feeling. The numbers are telling a pretty dramatic story. A tale of two markets that, not too long ago, seemed to be walking hand in hand.
And the backstory here is pretty fascinating. For 2 whole years, all the way from late 2022 to the end of 2024, the relationship was there. Gold and Bitcoin, they were moving together. The whole digital gold thing, it looked totally solid. And then bam, 2025 hits, and we enter what some are calling the Great Divergence.
And when you look at the year-to-date numbers, you see just how massive this divergence is. It's not even close. Gold is up an incredible 60%. Bitcoin, meanwhile, is down more than 7%. This isn't just a little blip on the radar, it's a total reversal of fortunes. And this goes deeper than just the price charts, you know? It's about the whole vibe of the market. The Fear and Greed Index shows it perfectly. For gold, the mood is pure greed, way up at 79. But for crypto, we're stuck down in extreme fear at just 24. It's like two different parties on two different planets.
So how in the world do you explain all this? Well, some of the top analysts are weighing in, and their take might actually surprise you. They're basically saying we might have been thinking about this whole thing the wrong way from the start.
All right, let's start with the pretty fiery take from James Check over at Glassnode. He is not holding back. He basically says that any Bitcoiner who thinks gold needs to fail for Bitcoin to succeed just doesn't get it. He's making the case that Bitcoin is its own beast and doesn't need gold's permission to run.
Now, macroeconomist Lynn Alden, she comes at it from a slightly different, more nuanced angle. She's not buying the idea that this is some kind of competition, a zero-sum game. For her, it's not about one winning and one losing. She argues that both Bitcoin and gold have their own completely separate long-term reasons for being valuable.
So her explanation for this huge split is actually pretty simple. It's not some super complex thing. It's just that gold had a massive breakout year, with all the talk about looser money policy and global tensions. And at the same time, Bitcoin just had a kind of stagnant year. They're simply on different schedules right now.
Okay, so this all leads to a really exciting thought. If Bitcoin isn't just tied to gold's hip, if it's really starting to carve out its own unique identity, what does that path actually look like going forward?
Well, despite all the fear in the market right now, a lot of the heavy hitters in the industry are incredibly bullish. You've got Matt Hugin over at Bitwise calling 2026 a year of growth. And then there's Samson Mao, who's even more optimistic. He thinks Bitcoin might be at the very start of a bull cycle that could last for a whole decade. They're seeing this current slump not as the end, but as a breather before the next big independent move up. So that leaves us with this one big final question. As Bitcoin really starts to forge its own path, driven by its own story, is it finally time to just retire that digital gold comparison for good? Are we watching Bitcoin graduate into its own totally distinct asset class? Let me know what you think. And hey, if you found this breakdown helpful, do me a favor and hit that like button, share it with a friend, and be sure to subscribe to Crypto Explorer 24/7.